My name is James Dinsmore, and I am one of the portfolio managers focused on convertible strategies at Gabelli. Our team currently manages $500 million in convertible assets and has over 60 years of combined experience managing convertible portfolios. Today I want to talk about why we find convertibles particularly attractive in the current market environment. First, they allow us to maintain exposure to equities in a rising market. By investing in convertibles, we are still able to participate in the equity market gains at a time when the economy has shown signs of strength and resilience. Second, they offer a yield advantage over equities. We are able to create a portfolio that has a higher level of current income than would be available to us with stocks alone. Third, unlike straight bonds, convertibles do well in rising rate environments. In the past 8 periods when the 10-year U.S. Treasury rate has risen by 100 basis points or more, convertibles have been up all 8 times. And in the 12 months following each rising rate period, our returns have been up 7 of 8 times. Finally, if the market is running too hot and we do see a downturn, convertibles are higher in the capital structure than common stocks, and most have a maturity or put within 5 years. This reduces our downside risk as it entitles us to the par value of our bonds in a relatively short period of time. So with equities near all-time highs, we think convertibles offer a compelling way to remain invested with an asymmetrical return profile that should outperform in flat or down markets. Our team has a long track record of investing in convertible securities. We've seen how they react in many different market cycles, and over more than 20 years, our returns have been in line with the S&P 500 with only 3/4 of the volatility. In the current market, we were able to build a diverse convertible portfolio that offers a combination of yield, capital appreciation potential, and downside protection that should perform well whether the market continues marching higher or if we see a return of volatility.